This is Satya Pradyuman from Cirrus Research. Just want to go through the latest global positioning report that's been released. The title, Expensive Markets, a Liability, as the interest rate regime shifts. Dominant US and European markets are notably rich. If we look at the violence that we've seen in the equity markets the last few weeks, it's fairly dramatic. As much as we're starting to see more of the speculative names really break down, the reality is that it's the rate risk seems to be hitting pretty much all markets and all segments. The charts to the left here that you're seeing represents the valuation of the US equities and European equities. And this, we thought, was an interesting way to look at the data, because what you're looking at is about 20 years worth of multiples. And what you'll notice, the blue line in the upper panel represents smaller firms in the US. The blue line below in the lower panel represents European smaller cap multiples. At the heart of it is that they are trading at the higher end of the range historically. Now, this makes sense as rates fall lower and lower in the last 20 years. Multiples are allowed to expand. What's kind of important, though, is you put this up against the large cap group, the purple curve. What that's showing is that the spreads are now historically wide. And one way you can tell this is the case, if you look to the right panel, this is the relative valuations of smaller to larger firms. You're looking at spreads that are closer to like 1.5, 2 standard deviations below normal. So ironically, if rates really become more volatile, valuations are going to matter, and it's going to work against the most expensive pockets of the market. So in a really perverse way, you could end up seeing the smaller firms outperform because all of a sudden valuations matter. One other point I want to emphasize from this report is this focus on quality. What you're looking at here are critical markets like the US, European equities, Chinese equities. These curves represent their sales growth. And what you'll notice is in the last 18, 24 months, we've clearly seen a dramatic rebound in sales growth. And this feels right because what you've gone through post-pandemic, or as we come through this pandemic, you're witnessing a fairly strong rebound. The bottom line, though, is if you look forward, the rate of change in sales growth has to slow. It's just the law of large numbers. As a result, this idea that we've been emphasizing quality will become more and more important. As the rate of growth slows, even though the profit cycle will continue to expand, as a rate of growth slows, it basically forces more of a focus on margins. It focuses on better balance sheet, earnings visibility. So these elements continue to matter. So we do think you want to emphasize quality as we go through this current year. With any questions, feel free to reach out to us.